Hello, everyone, and welcome to the webinar today. We are so thrilled to have you with us. My name is Alexandra Alvarado, the Director of Education and Marketing here at the American Apartment Owners Association. And with us today, we have Michael O'Shea. Michael O'Shea is going to do a quick announcement for our members here. I will be doing the rest of the presentation on how to spot hidden red flags on a tenant's credit report. But the reason why I had Michael come on today is because he is with Origin Investments. Origin Investments is today's sponsor of this webinar. And so I'm going to hand it off to Michael. He's going to talk a little bit about what Origin Investments does, and then I'll be sure to put his information in the follow-up email. So if you do want to connect with him, you can. Michael O'Shea is the head of private wealth at Origin Investments. So I'll let him take it away from here.
Thanks, Alexandra. Really appreciate that kind introduction, and thanks everybody for joining us today. We are going to be talking a little bit through, when you come onto these calls, there's a lot of problems and challenges that you have to face managing real estate. So, how to spot red flags in a credit report, or insurance costs, or maintenance, or what have you. What we do at Origin is we help people sort of eliminate all of those problems through a 1031 exchange into a DST. And we have a unique solution that we offer directly to investors. So primarily, this DST market, if you're familiar with it, has a commission-based system and fees. And so at Origin, we wanted to create a product where we would bring a DST directly to investors and create a low-fee DST and result in better investor outcomes for you. So the goal of this solution that we offer is, you see it on your screen, to protect your wealth. You've already owned real estate. It's a valuable asset. It generates income. So we want to protect what you've built, but we want to simplify your life by moving you out of an active ownership in real estate into passive. Very briefly on Origin, we're a real estate investment management company. We're based in Chicago. We do not invest in Chicago. We're a very data-driven firm. We invest only in multifamily, so apartments, and we really focus 100% on where do we believe that the rent is going to outperform the rest of the market across the United States. And so we've identified 14 target markets through these highlighted states you see here throughout the Sun Belt and the Front Range of Colorado. So when you do a 1031, when you're selling real estate, I think part of the eye-opening thing is that the tax liability is so significant. So it's not just the capital gain. You've got state income tax to think about. You've got net investment income tax. You've got depreciation recapture tax for assets that we've owned a long time. And so it could be up to 50% of the value of your sale. And so people a lot of times will just begrudgingly hold real estate forever. So what is a DST? A DST is a Delaware statutory trust. We have a full revenue ruling on this that says an interest in a DST will qualify as like kind for the purposes of a 1031 exchange. So in our case, you could think of that as like a $100 million building in Dallas, Texas. So you sell a $1 million property, you do a normal 1031 exchange into that deal, and now you own 1% of a much larger asset. Just to give you an idea of kind of like the size and the scope of the DSTs that Origin puts into the marketplace, we just closed one in Dallas at the beginning of this year, and we've got two more that are out in the market. This one is Nashville, Queens. This is in the WeHo district of Nashville, 94% occupied, stabilized cash flowing deal. This is another deal in Charlotte. We just brought this to the market last week. So this is a 90+% stabilized occupancy deal in the NODA district of Charlotte. Both of these are 250 plus units, very institutional. And the idea is that you kind of roll your capital into these deals without paying all of the upfront fees. So if you were looking to do a DST on your own and you found a company either online or through searching, most likely you would end up paying a significant portion of your investment into fees and commissions. So at Origin, we wanted to offer an institutional value proposition to our investors. And so we virtually cut out all of the fees, allowing you to come directly to us to do a 1031 exchange, which is going to put more of your capital into the ground and result in a better investment outcome for you. Obviously, that's a very brief overview. There's a lot more to discuss. Do you have debt on your properties? Do you have partnership interest? 45 days, 180 days. There's so much to it. So the goal of that is just to say, if you want to talk further about potentially selling your asset and doing a 1031 exchange, we'd love to have a discussion with you. I'm going to throw my booking link into the chat as well. And so you could feel free to click that link and book, or you can send me an email right here, or you can scan the QR code. Thank you very much. Look forward to talking to you.
Thank you so much, Michael, and everyone. That was Michael O'Shea from Origin Investments. He is our sponsor today. And I have a quick poll question to add here for Michael. Want a free step-by-step 1031 exchange checklist? You can say yes or no, thank you there. So thank you, Michael. We will go ahead and get started on this webinar just in a few minutes. Thank you all for your patience. I see Michael put his link there in the chat. Okay, I'm going to go ahead and start sharing my screen here. Let's get that started. Just a moment. All righty. So let's see here. All right, just adjusting a couple settings here. Hold on just a moment. Okay, everyone, if you can give me a thumbs up or a yes in the chat that you can see my slides, please let me know so we can ensure everyone can see everything just okay. All right, let's see in the chat. People are giving me thumbs up. Awesome. Welcome, everyone. Good afternoon, Susanna. Thank you, Gabby, for the confirmation. So we're going to dive in. We have a lot to talk about today. First off, I want to give our typical legal disclaimer here that this isn't legal advice, and I am not an attorney. However, I am going to be giving you lots of information that you can take to your attorney. This is just for educational purposes. So if anything I say differs from your current policy or what your attorney has approved, always make sure to run it by them and only implement that change once they approve it. So today's agenda, we're going to be talking about credit report and identity fraud, something that we've really seen rise in recent years, credit score models. Kind of a mystery to a lot of people, but I think it's worth going into that a little bit more so you can really understand where credit scores come from. And then what is missing from a credit report. So over the years, what has been reported on a credit report has been changing. Some data is now missing. We have some solutions for that, but we want to cover and know what is really on a credit report. And also, how can you tell if someone has late payments, charge-offs, foreclosures, repossessions? What do these terms mean? And also, if they owe debt or rent debt to a property management company or a previous landlord, collections, what does that all mean? What are the red flags there? And of course, bank as well. So what do you do once you do decide that you're not going to rent to someone anymore, or you're not going to rent to them? The risk mitigation strategies that we can put in place to really help really all tenancies. That'll be a sort of bonus here, and then we'll take questions. So credit report and identity fraud. So we have some really sneaky tenant tactics that we've seen pop up. You might be familiar with some of these if you've been doing some credit report screenings for a while. One is disputing a rent-related collection. So what might happen is they may owe a debt to a previous landlord, and then once they enter into a dispute with that landlord or with the creditor, then it actually doesn't affect their credit score until the investigation is completed. So that is one thing that they could do. You would be able to see it on the report, but at that point, they could give you their version of the story. So what you want to do is make sure that you're calling multiple references. Call that previous landlord, ask them what really happened. Make sure that you're also contacting any other references, maybe even further back more previous landlords. Also, we've seen tenants who provide a fake credit report. I had one of our members message me just yesterday about this topic and saying, how can we tell if it's fake or not? The problem is you can't really tell anymore nowadays. AI, Photoshop, they've really made it so easy to make a fake credit report or to edit a credit report. So I can't really say that you can tell. However, what you should probably do is trust data, not people. Run your own credit reports. Now, I know California and a couple of other states have implemented laws that allow tenants to give you a reusable screening report or a shareable reusable screening report is what they might call it. However, you do not have to use that by itself. You can also still order your own credit report, okay? So make sure that you are ordering your own credit report and that you're getting it straight from the source so you can be 100% sure that it is in fact their credit report. And Alex says here in the chat, be careful of those credit repair scammers. Definitely something some tenants do fall for. Also, asking for only one tenant to get credit checked. So they might be applying husband and wife, roommates, and they might tell you, actually, we're not we don't both have credit. So why don't you just run the credit check on just me? You really don't need to run it on both of us. Meanwhile, one person might have the negative information on their report and the other person doesn't. So they're going to just show you or want you to pull the credit on the person that has the good report. When you're married, it doesn't necessarily go to both reports. It kind of depends on how you open up that line of credit. And so you definitely, even if it's a couple, they've been together for a long time, make sure that you are running a credit report and really screening all adults in the unit, even if they say they don't have credit or that they have very little credit or that they won't be contributing to the rent, because ultimately their debt could still affect the ability of everyone on the lease to pay, right? So definitely a good idea to always screen all tenants. Next point here, claiming they don't have credit history, sort of touched on that just a moment ago, check their credit anyway. Also, a fake or deceased social security number. So I've actually seen this also done with a junior and senior situation, right? Dad using son's credit report, son using dad's report, they have the same name. So that's another kind of variation of this. So what you want to make sure that you do is that you're ordering also a social security number fraud report with that. So with AAOA, that comes in our premium package. You can also add it on to any tenant screening. Tenant alert, it's also in the premium package. So definitely make sure that you're verifying that social security number because the credit report might come back and it might be a legitimate credit report. It just doesn't belong to your applicant, right? The other part is alias names. So again, they're using multiple name variations to try to establish multiple credit files, and hopefully they'll give you a name variation that doesn't have any bad history. That's kind of what they're thinking, right? But what you can do is order a previous address tenant history number. That helps us to make sure that we're searching for the correct name. If you see completely different names on that report, that's obviously a red flag. Also, an incorrect date of birth. This one might be a little less problematic because usually we'll be able to, and the credit bureau can track the tenant based on the name and social if it's correct. So again, just make sure that you're collecting multiple forms of ID. We're going to go over this in a little bit more detail. Michael says that my voice keeps going in and out here in the chat. So please let me know if for some reason you see that or hear it again, and I can try to adjust my settings here. All right, so the first red flag here is warnings or mismatch of information. So if there's no credit report, that could be a red flag. It's not necessarily a red flag. It's possible that they've never established credit, but it is a time to start asking some questions, right? So you want to make sure that you are asking for those name variations, confirming the social security number. and also if they have credit cards or loans in their name. So I think really what we want to do is also make sure that we're not conflating getting a credit report with that necessarily being a green flag, right? Just because it comes back doesn't necessarily mean it belongs to that applicant or that the information is 100% accurate. A lot of people don't know this, but the credit bureaus don't require 100% accuracy for a credit report to be returned. So if there's one digit off on the social or a letter or two different on the name, you might still get back that credit report because the credit bureau has found enough of a match to be pretty certain that it's your applicant. So again, don't feel falsely confident just because you did get a credit report either. We still need to do other reports outside the credit report to really verify that that is in fact their information. Also, you want to look out for AKAs or other SSNs in the credit report. So there will be a section where there's personal information, and it should show the information that was entered. It will have X's kind of blocking out the social for privacy reasons. But if there are multiple socials or multiple date of births or names associated with that file, right next to it, there will be AKAs or other, and you can see there any other variations, which is a red flag. Also, you'll see warnings, kind of like this one that you see on the screen here at the bottom of the report. This one is basically saying that it matches, so there's no warning, but the warning would say that it wouldn't match, right? So just make sure that you are double checking, triple checking with the applicant, the social and the name. Believe it or not, many applicants actually provide a bad social, maybe not on purpose. They sometimes might invert the numbers or forget them. Again, sort of a red flag. I would call it maybe more of a yellow flag. If just make sure that they're not giving you too much of a hard time when you're trying to verify that information. Also, we want to check if the previous address history report is blank. So here is what it looks like when it's blank on our end. So if we have collected the social and the name, and we cannot find any addresses associated with that name or social, then it's very likely that either it's incorrect, the applicant is too young to have established credit history, or they're too new to the country to have established credit history. Those are some common reasons, right? However, if they do have credit or they have lived here for a long time, it can be a red flag. So ask them if they have credit history, verify the spelling, especially of the first name, and then verify that the SSN was entered correctly. So hopefully you'll see a long list of addresses here. Now, that really helps us to not only verify who they are, but also do a better eviction search and criminal background search because the addresses can help us to really narrow down, especially if they have a common name. So it's very useful for other purposes as well. So definitely make sure that you have that all filled out. Basuki says in the chat, some applicants do business with cash only. They look rich with expensive cars, but they do not have a credit record. A little suspicious too, right? So we want to make sure that if you are verifying income, which we'll talk about in a moment, that you are able to actually verify it, right? It's hard to verify cash income. And so I'm going to talk about that in just a bit. First, let's talk about verifying ID. So in California and some other states, you do need to accept any sort of verifiable government issued ID. You can't necessarily require that it be a social or a passport or whatever, but any one of these would work if you want to collect a form of ID or two. Now, in other states where that's not a requirement, you could require them to give you a social if that's part of your process. Now, if they say that they don't have a social or they don't want to provide one, then in that case, you can use an ITIN number, which is an individual taxpayer identification number. That is what people get before they get a social. They can use that number. It's the same number of digits as a social to apply for credit to apply for loans, and it essentially works like a social. So an I-10 would be just fine. We can't verify that the I-10 belongs to them through like our Social Security fraud verifier, right? Because it's not a social, but it will pull up a credit report. So you can take that instead of a social for that purpose. If they refuse to give you a social, or they don't have an I-10 and you can't pull a credit report, and that is one of your requirements, that may be grounds for you to decline that applicant. So check with your attorney on that and making it a requirement. Again, laws can vary, so check on that and make sure that you're also, again, checking one more time, does the name and the address and the date of birth on that ID match? And if there's any sort of variation, you want to make sure you're getting some sort of explanation from them. All right. Also, income. So I touched on this just briefly a moment ago, but there are other ways to verify income that is going to be crucial in making sure that this person can afford the rental, right? So I think asking for bank statements within the last 30 to 90 days is a good idea. The amount and the entity of any direct deposits from an employer should match up those pay stubs. And if they're paying rent from their bank account, then that should match too. And also, of course, check for that healthy savings and checkings balance. Also, tax returns is another great way to verify income and identity. So consider that, especially if your applicant is self-employed. Last two pay stubs is always good too, although those can be faked as well. With all of this, what we're really trying to do is make it harder for the applicant to fake multiple forms of identity or of documentation of income so that it becomes harder for them. Maybe they're not going to be as interested in your rental, which is a good thing. It weeds out people who aren't willing to really provide all the verification that you require. And if there's any sort of alternate kinds of income like Social Security, you can verify that. So if you can verify the income, you may consider it, right, for rent into income ratio purposes. So just make sure you're doing that. You're not just taking their word for it. Okay, other documents as well. Proof of renter's insurance, that should have their name on it, their previous address on it. And then hopefully if you rent to them, right, you make sure that they switch it to your address and that you're listed on there as well. So you're notified if they cancel renter's insurance. Also, a utility bill with their name could be helpful as well to identify them. And a letter of employment status if they're just newly hired, or if it's a personal reference kind of letter, like let's say it's a very young tenant or someone outside of the country, like something there that might help you identify who they are or any sort of circumstances around them renting. Okay, so now we're going to dive into analyzing the credit report. This is the meat of the presentation. There's a lot to cover here, okay? But this is really how to go about looking at just credit reports in general. So first we have credit score models. Okay, there are multiple score models. I don't think people realize this. There's a lot more than just FICO. And even within FICO, there's different versions of FICO. There's industries that use different models for different purposes. And all models are sort of trying to assess, right, the person's credit worthiness. Some are unique to a specific credit bureau. So TransUnion, for example, has their own model. And then you have also models that are across all three major credit bureaus, like FICO, for example, or VantageScore. And then also those ranges are different. So a good score on a FICO might be different on a different score model. So whatever kind of notion you have as to what a good score is really subjective just to what score model you're even talking about. So you really need to be familiar with your score model to understand where your tenant stands. And also, credit scores within any model that you're using can vary within multiple times of the month. So creditors aren't required to all report when someone pays their bill on the first of the month. It may be the 7th, the 15th, whatever day, right, that it lands on. And when that information is reported, at that point, that person's credit report and their score will change, right? So some applicants who might show you an old report, maybe they're not trying to scam you, but they said, hey, 60 days ago, my credit score was a 700, but then you run the report and now it's 650. So it could be a few different reasons. A different credit bureau, different score model, right? But even if it's the same credit bureau and score model as the one that you're going to use, it's very possible that they missed a payment or something new was reported on the credit report that changed how their credit score was issued. So I think with all this, though, just to make this simple, just compare apples to apples, okay? Don't go around trying different models or trying to look for the best one. I don't know that there necessarily is a best model. The best model is the one that you use every single time because you're able to really compare each tenant to each other, and you can do it in a more fair way. You can set your credit score limits that you like or the minimums that you want to see from your applicants, and that makes it a lot easier. So this is why also when a tenant gives you a reusable screening report or reusable credit report, it's not really helpful because if they're using a completely different score model than you are, how are you going to compare them to all your other applicants, right? So again, run your own credit reports, keep the same score model, don't go jumping around to different ones. So you might be curious as to what we use. AAOA and Tenant Alert, I know I have some Tenant Alert people here today. We use Experian VantageScore 4.0 by default. We'll talk about that score model and why we choose it in a moment. However, we have access to tons of different score models. I mentioned FICO, for example. TransUnion has a model. We also have Equifax and TransUnion as well. So you can really customize whatever you want, but there are additional fees for doing that. Otherwise, most of you are probably going to be just set to our default, which is the Experian VantageScore 4.0. All right, so about the 4.0, reason why it's great is because it scores more applicants. So 94% of applicants get a score. It's very predictive. It's using AI modeling and other sort of demographic data to predict the person's ability to pay rent, even when they don't have a ton of credit. Also, it reflects credit behaviors over time rather than relying on a single point of time. So it's better with trends than some of the other score models. And starting in 2025, it's now being used for the Fannie Mae and Freddie Mac mortgages. So it's becoming a lot more common in the industry to use this specific model. I put a link in here, by the way. I'm going to share the slides with everyone. So you'll be able to click on this link if you really want to get into the nitty-gritty of the model. There's a whole like 10-page PDF as to exactly how everything is calculated. But in summary, this is the important stuff, right? So payment history is going to be the biggest factor here. Okay, so 41%, that means are they late, charge-offs, collections, right? And then we have the age and the mix of credit. So what kind of credit is it? Is it like hard money loans? Is it an auto loan? And how long have they had these? Obviously, the longer the better. That shows a better track record. Credit utilization. So are they maxing out on their credit cards, right? We want to make sure that's not a thing. They have enough there if they ever need it. New credit. So are they applying for a ton of different credit cards and maybe getting denied for them, right? Credit balance. So that's just the total debts that they have and available credit. So if they wanted to take out more lines of credit, is there more for them to be able to do that? This is what the model looks like. So it's scored from 300 to 850. And then you can see here, poor, fair, good, and excellent. So it's very clear here where it will fall. However, where you want to set your minimum is totally up to you. I know some landlords think 600 is fine. Others in like higher end rentals want a 700 or above. So just make sure that you are really nailing down where you want to be. Basuki's asking, is Tenant Alert VantageScore 4.0? Yes, it is usually by default. Double check with us if you really want to know, or you can look at a recent credit report to check it out. But most of them will default to that. All right. So I want to talk about data that is missing from credit reports. So a lot of people don't know this, but income is definitely not a factor on a credit report or a credit score. So that's why, again, I went over how to verify income because it is so important and it doesn't affect their credit score, right? Their employers sometimes might be on there, but the credit bureaus, they do not guarantee at all that that information is always up to date and accurate. So you always want to make sure you're calling that employer, verifying salary. If you can, call the company, ask for their HR, and ask them, hey, does this person even work here? Also, utilities, rarely on there, unless it's a collection for a utility, then it will be on there. Monthly rent is rarely on there, but that's becoming more common. Evictions, civil judgments, and tax liens are never on there. It's kind of crazy to think that someone can get evicted and it doesn't automatically appear on their credit report. Also, any sort of lawsuit. So think about a property manager suing a tenant for excessive damages. Not going to be on the credit report or reflecting on their score at all. They owe money to the IRS, also not going to be reflected on there. We will go over how we can verify these things outside of the credit report since it's not on a credit report anymore. Also, medical debt has changed. We'll cover that in a bit. So it's sometimes on the report. And we have what is always on a credit report, recurring debt. So recurring is like a credit card, for example, that has, you know, a minimum monthly payment, but you can spend up to the limit of whatever the card is, right? Over the course of however long you have it open, right? There really is no set end date to that line of credit. Collections are also always on there. That's obviously when, you have someone who hasn't paid you, right? You want to use a collection agency to report that as a collection item. That's where evictions could appear because a landlord or property manager might have actually gone through the effort of hiring a collection agency to report the debt to the report. Otherwise, it's not going to be on there. Bankruptcies are usually on there, although I will say, and I'll show you an example later, that the information is pretty limited. So you might have to do a little bit of research if you want more details about the bankruptcy. Late payments are always on there. Installment debt. So that is different than recurring in that it has an end date. Okay. So auto loan, right? We're going to pay that off maybe in 5 years. So we know exactly when it's going to finish and how much balance is left. And then it gets to zero and it closes out. That's going to be installment. Credit scores are usually on there, although sometimes it does take a little while for a credit score to kick in. So if someone just opened up their first credit card, maybe it might take, 60 to 90 days, or if they stopped using their credit completely for a year, they may not have a credit score anymore. Check writing history is never on there. So if they've written any bounce checks, you're not going to see that. Their checking and savings account balances are also not reflected on there. Again, that's why it's so important to make sure you're getting a bank statement if it is something that you're considering. Having that safety net is really helpful to see that they have something in the bank, right? Because the credit report's just not going to tell you that. Yeah, D says evictions and judgments from small cities are not listed on credit reports unless creditor hires a service to list. D, that is no longer true for just small cities. It's literally every city. So, yes, good point. They are not going to be on the credit report unless they hire a collection agency to do that. All right, so a couple things that have changed worth noting. Again, state and federal tax liens and civil judgments, including evictions, were removed in 2017. Now, I will clarify, they weren't all 100% removed in 2017, but as of today, it's pretty much 100%. It was a gradual process, so we're pretty much at zero now. Paid medical debts also have changed in 2022. Basically, medical debts that are less than a year old, medical debts under $500 were removed. Now, moving forward, medical debt hasn't really been as big of a factor for landlords and property managers to make their rental decisions. However, it is important to note that if there is a substantial medical debt, it may take a year or more for it to show up on the report. Also, education loan deferments from COVID ended in September 2024, essentially all student loans were put on pause automatically, forbearance, whatever you want to call it. If the tenant wanted or the consumer wanted to pay, which I'm sure most people didn't, right? They could, but automatically it just wasn't going to be due or, you know, required for them to pay. However, those that are on the SAFE plan, which is a plan where, it's income driven, right? So some applicants could in the past apply for a sort of repayment plan that sort of scaled as their income scaled. That is still in deferral, mostly because under the Biden to Trump administration transition, there were some disputes in the courts about it. And so we're seeing that it's still deferred. Estimates are that August, September, those will become due again. And the Department of Education just 3 days ago has resumed student loan collection on defaulted loans since 2020. So 5 whole years, students were not being sent to collections and were not appearing as defaulted loans on their credit report. So I think since this just happened 3 days ago, my prediction is that in the next 60 to 90 days, you all will start seeing some credit scores drop. You might start to see some student loans in collections. So keep an eye out on that. That's definitely something really brand new, I think is going to affect a lot of people's credit. Also, we're going to talk about late payments here as well. I'm going to pause here real quick and look at the Q&A, make sure that I have here everyone's information. Has my voice been going in and out again? If you could let me know in the chat, that would be great. Okay, obtain a copy of the Zoom call. I will be emailing everyone the recording, so no worries there. If you need to, leave or pause or anything, you can always rewatch it later. Okay, Ari says, I've noticed meaningful differences from the Experian credit report provided in a Zillow application and the one I run on my own through TransUnion. Any comments on this? It can make or break meeting our credit screening cutoff. I hate to break it to you, Ari, but those are completely different score models. So you are not comparing apples to apples. That is why it's so different. So what you need to do is really pick one and just keep using that same one because you're going to get completely different information. Experian and TransUnion are not only different agencies that might have different information, but the score model that Zillow uses is different than the one that TransUnion uses. So I would say just stick to one, keep it simple, a lot less confusing, a lot less room for error. How do you check applicants who are international and don't have a social and credit history? So we went over that a little bit, right? If they have credit history, you can use the ITIN number instead of the social. But if they don't have credit history, then all those other factors are going to be a lot more important. That bank account is going to be super crucial. We do have international background checks upon request, but they are pretty pricey and they do take a long time to process. So might not be a good fit depending on the country. Canada, Mexico, those are kind of faster, but we do have, significant delays in certain countries. So it might just be that you need to verify their employment, verify their bank statements, maybe have a guarantor or co-signer who is in the US and has credit history. If you do need to take somebody to court, that's helpful. So not that you have to reject them, but also you don't have to accept them necessarily either, right? It could be a requirement that your applicants all need to have credit history. However, you do need to apply that across the board. So it can't just be only if they're international. It would be like across the board, anybody US born or not. If they don't have credit, I'm not going to rent to them. So if that's your policy and you apply it the same, that's something you could consider as well. Okay, what if the applicant said they don't have personal credit report, they use cash only, and they have business social number to check the credit report? So again, if you can't verify it and you require to be able to verify it, then that's it. They're not going to get the place, right? So think about what you need to make a decision, what your requirements are, and just make sure you're applying that uniformly to everyone. Lisa says, any suggestions for what to do when current or previous landlords do not want to verify info or references due to liability concerns? Fortunately, there's not much you can do, but I always say it doesn't hurt to ask. So, yes, there are some property managers and landlords that may not be very cooperative, but definitely still keep trying to get information or what you can. Some of them might only give you, partial information. They might not tell you anything else other than that they live there. Even that can be valuable. So, definitely still don't give up, give it a try. But if it doesn't work and they don't want to do it, then there's not a lot you can do, right? Michelle says, if evictions are no longer on a credit report, then why do all reports include an eviction section still? Rent Spree does. So is that just fluff in credit reports? Please advise. Yes, it is fluff. There are a lot of tenant screening companies that still have a section that has like a public records kind of section, and it's going to always be blank. However, I will say, screening companies, a lot of them, most of them, they'll have a separate report now, which they call the eviction report. And that's going to be a search at the, court level, not through the credit bureau. That's what we do. So we still provide an eviction report. It's just not included in the credit report. It's not coming from Experian. It's not part of the credit score. It's completely separate and it's coming from the courts. So you might see that. However, if there's a section within the credit report that says evictions, it's always going to be blank. It's just not going to come up anymore. Okay. What's your take from Billy? Billy Goat, I like that. What's your take on renting to two friends, one with okay credit and the other one with poor credit below my cutoff? So this is another policy you can think of in advance of what you want to do when you have this situation, right? Do you take both and you average them, or do you want both of them to be above your minimum? Or is there maybe a way where you're using their income to sort of offset maybe a poor score? Whatever it is, it should be the same for everyone. So think about that now. I personally like the idea of doing maybe a minimum. And then if they don't meet that minimum, you can use lease guarantee. So lease guarantee is something we're going to cover at the end of the presentation. It's sort of a type of coverage that you can get on the lease. If the tenants don't pay rent, then the lease guarantee can step in. And that's something you could require them to pay if they don't meet your criteria. So something to consider if you don't want to say no to them outright. So we'll talk about that at the very end. Oh, you're welcome, Sam. You're welcome. He says, thanks for doing this. Michelle, can a landlord do their own public record search for evictions online? Or would we have to literally search every possible city to get a complete picture? So yes, you would if you did it on your own. So without knowing where the applicant lives, or has lived, right, it would be very difficult to do that search. It would literally be every city, right? So what we do is we or other tenant screening companies can basically search all of that for you, all that data for you. And then really what we're using is that address history report to verify that that person actually lived there, because eviction records, even if you were to find them, it's very difficult to search because you need to have the name and the address, not just date of birth and social. Date of birth and social is actually mostly not on an eviction record. Most eviction records don't have those. So you really have to rely on the address. What's the fee for that? So that's included in all of our packages. I'll show you at the end. We include an eviction search in it's not all of them, but it's like the four major packages that we offer. Or if you want to buy it a la carte, I believe it's $9.95. I'll have to double check on that. Do you have any suggestions to trace the tenants who move to other cities? So that's outside of my scope. You might want to hire a private investigator or collection agency to track down a tenant if you're looking for them. But other than using the previous address history report, which can tell you where they've lived, for the most part, if they didn't report it anywhere, right? Like if they're sleeping on their friend's couch, it's kind of hard to know if they, live where they live right now. So if you are looking to track down a tenant who owes you money, make sure you're using, a professional collection agency or private investigator to track them down. All right, I'm going to stop there on questions so that we can keep going. I do see some people put some things in the chat. So chat is great for comments, but also if you have a question you want me to actually answer, put it in the Q&A, okay? Because I probably will miss it if it's in the chat. Okay, so let's go over what types of late payments we're going to see on the report. That's obviously a red flag, right? But there's different types. So we have 30 days, 60 days, or 90 days past due, obviously. Going to get worse the longer they have past due. Collections. If the creditor uses a collection agency, that gets reported in its own section. Profit and loss write-offs or charge-offs, that's where the company may not be using a collection agency. They're doing maybe an internal collection. That money is still owed by the tenant, but it doesn't actually appear in its own section in the credit report. We'll go over what that looks like. It's definitely a red flag. Basically, either the company's trying to still collect on it or they've charged it off at this point because it's kind of beyond, I guess, worth it for them to even try anymore. And then there's the repossession and foreclosure status, and then bankruptcies as well, which are in their own section typically. So here's a negative trend. So just want to show you what that looks like. So these are on our reports, but other credit reports, they might be formatted a little differently, but the concept is the same, right? We want to make sure that these last boxes here, which is the most recent payments, are all green. And we have yellow to orange to 90 to back to 60. So it's clear that this individual has been having a difficult time making payments. They're not quite caught up. And then we can also see that here in the past due amount in the right column. So $1,115 are currently past due. And we can basically see also on the left, what's their balance? What's the monthly payment on this? And what kind of account is it? It's an auto, which means it's an auto loan that has a 72-month term. That's pretty common. And they owe, over $1,000 now on it, and they still have to continue making their monthly payments. So this is definitely a red flag. We see they also struggled here back in 2024, January, February, March, just a year ago. So I would say this is definitely a higher risk sort of account. So you want to look at trends more than anything, right? If it would just happen once, like 3 years ago, maybe they just forgot to make a payment or something, but this shows more of a pattern of inconsistency, so it's more of a red flag. Also, we talked about profit and loss charge-offs. This is what that looks like. So essentially, when this happens, it's going to show you still the past due amount, which was $3,923. It tells you when the account was open and the last time it was past due. This stays on their account for 7 years. So we're really looking at here September, October, November, December of 2022. They basically fell off and stopped paying. And then it looks like the creditor, in this case, Upgrade Inc., they decided, okay, we're just going to charge it off. And we're not going to really pursue the debt as much through a collection agency. But they still technically owe the money. That's still going to affect their credit score. So they've basically decided at this point in 2022 to just end it there. And the last payment or the last few payments when this happens, unfortunately, do sometimes get marked as UKN. Sometimes all of the payments will get marked as UKN, which stands for unknown. So if you don't see any payment history once it's been charged off, that's why it's a little frustrating. Could be nice to know like how far behind they were or how many months they didn't pay, but you can kind of tell by the past due amount in those cases. All right. What is CPN? Susie, have you heard of applicants using fake socials such as CPNs? No, I haven't. I don't know what a CPN is either, so I'll have to kind of revisit that. Okay, here is a charge off like the one I was just describing, where all of them say unknown. I also want to point out the remark, the account was closed at the credit grantor's request. So this remark is important just because it's going to show you that the creditor, whoever, Capital One in this case, loaned the money or opened the line of credit, they decided to close the account. Likely either because the person obviously wasn't paying, but in some cases, it also could be because they just stopped using the credit card for way too long. So this is a little frustrating again because you don't really know exactly how many times what happened here, but we do know that they still owe $2,225. That's the past due amount. And we know that this happened back in last reported, it says July of 2024. So basically, we're looking at, it's been a little while. They still owe a lot of money. The Capital One closed it. They forced them to close that account and it was marked as a charge off. So they're not going to pursue it in collections. Okay, repossession or reaffirmation of debt. Here's an example of what that could look like. Again, same thing with the unknown. It's kind of odd, but it does sort of, take it off once it gets to this status. You can see what kind it was here. It was an auto loan. That's the trade type. And then you could see the past due amount, $4,870. So again, just another sort of way that you want to always check those remarks and the account status codes on here just to make sure that you know what it's for. Because if you just look at the creditor, it's kind of hard to know exactly what they owed the money for, right? Here's one that shows foreclosure. Similarly, however, when it's a mortgage, it will go into the 180-day mark, whereas most creditors, like for credit cards, will only go up to like 90 days and then they'll just stop reporting. So again, similar kind of situation here in that you just want to make sure you're looking at that remark. Unpaid rent. So this is actually paid, so that's good. However, I want you to know that there are some UKNs here, which is worth asking. So maybe the rent reporting was paused. Rent reporting is relatively new. This was actually one of the first examples I ever saw. I think as of late now, especially with California's new rent reporting law, which I'll touch on briefly in a bit, it's going to be more common. We're going to see more rent payments. However, with most rent payment platforms, rent reporting, most of them are only going to report positive payments. So the red flag you want to look for on these is not just a red for a missed payment, but especially in California, because most of these companies are only going to do positive, you want to make sure that you look for any gaps in reporting, like these UKNs, because that might mean that they didn't pay rent that month. Now, it's not a guarantee that they didn't, but it's definitely a worthwhile question to ask. Again, we're going to be seeing a lot more of this. This was back in 2020, very rare back then to see this. More and more landlords are going to have to do this by law in California, but I can also see this really trending nationwide as well. Okay, high debt. This, for me personally, I think is one of the most important aspects of the credit report. I mean, for just of all the things you can get from the credit report, to me, this is going to be the biggest factor. How much debt do they have, right? Can they afford to pay the rental, all their debt every month, and their cost of living expenses, and hopefully still have some left over to save a little or, have a bit of a safety net, right? So just because someone has an okay credit score and they meet your minimum does not necessarily mean that they can afford to pay the rent you are charging. I have seen so many reports with crazy auto loan payments. So they have a really nice car and half their income is going to their car, but they're paying it on time, right? So their credit score is good, but I mean, I don't know that I would want to rent to someone that's paying that much per month on their car unless they make a significant amount of income to more than easily cover that payment. Again, that's why it's so important to verify income, and knowing how much debt they have is very important as well. So you want to use that credit summary to find out how much debt they have. I'm going to show that to you in a second. Essentially, the way it's calculated is you have your revolving debt, so like credit cards, installment, so things like auto loans with an end date, and then that is going to be their total account balance, that's their total debt. And their monthly payment is how much they must pay every month to not be past due. We all know credit cards, It's usually like a really, really low monthly payment, right? But if you paid the minimum monthly payment, in some cases, you would never pay the debt off. So, I mean, you want to make sure that they can at least afford the minimum, but maybe even a little bit more because I mean, you'd hope that they'd be able to pay off that debt eventually. But that monthly payment amount at least gives you a good guideline so you can take income, right? And now you know off the bat how much is going to go towards the debt. So here's an example of the credit summary. It's pretty easy to understand, right? We have the past due on the left, any collections and bankruptcies here in the middle, and then we have the debt portion here, which is what we're talking about, right? So total debt here, $518. Amazing. It's so rare to see a low amount of debt like this. Usually, because of student loans or auto loans, we usually see thousands of dollars there. Now, the payment per month for that debt is $38. I imagine that's going to be like the minimum on a credit card. So can they pay $38 a month? I hope so. But if you see this payment per month, right, and it is $1,000 or a really high number compared to what your rent is, that's where it's really a red flag. So very important to look at debt. Whatever report you're getting from us or from another provider, it should tell you exactly how much debt that person has. Okay, collections. So this is an interesting one. We see collections all the time, but we want to make sure we look at the type of collection. So who do they owe the money to, right? So we said earlier, medical debt, maybe not that big of a deal, but let's say they're owing this money to ABC Property Management Company. That's a big deal. Okay, maybe there's a story there, damages, unpaid rent, maybe something else. Comenity Bank in this case is who they owe it to. Owing money to a bank is probably not great, right? Or utilities. So there are definitely some collections that are worse than others. So if you want to create in your screening criteria, maybe that you either want to see no collections or maybe no collections unless it's medical, you could make an exception for that. But basically, the type is important. Also, the amount. So I just saw one like, I think yesterday it was like $56. It's kind of silly that they were taking the collections for such a small amount. So maybe that was like an accident, something that they didn't know about. Maybe it just seems so low. I just wonder why they wouldn't pay it. Also, the date. So, did this happen a long time ago, or did it just happen yesterday? That's also going to kind of tell you as far as how much the uh, the collection agency is going to pursue it. If it's been a really long time, they might not really be pursuing it that long. It's going to be on the report for about 7 years. So, getting on to like close to year seven, it's probably going to be falling off pretty soon. Also, is it paid or unpaid? So if it is paid, then the current balance should be zero. Now, it's still not great, right, that they had a collection in the first place, but at least they paid it. So then they're not going to be pursued for that debt. At this point, the balance here is $419. That's still money that Comenity Bank through the collection agency Midland is going to be able to still try to garnish in some way. They may not have been successful the last few years, but something could change that would then allow them to start either garnishing wages or issuing a bank levy. So just be aware that that is all at risk to be collected in some way while it's on the report. Okay, bankruptcies. So here's what a bankruptcy could look like. And if you notice, there's not a lot of information, okay? This is tough, right? However, it does give you a reference number and a court number, so you can go and do a little bit more research and find out exactly what the liability is, even the type of bankruptcy. It really just varies depending on the court, how much information they're going to disclose on the credit report. Also important to note the three common bankruptcy types, 7, 11, and 13. Most of the time you're going to see 7. Seven's the most common. That's where you basically have all of your assets liquidated and 10 years it stays on the report. There's really no debt owed at that point, but it is something that kind of haunts the consumer for a while. 13 is a little different in that it does include a repayment plan. So that's a restructuring of the debt. So they might still owe maybe a smaller amount of what they originally owed. And then it's 7 years if discharged, 10 years if not discharged. And then Chapter 11, which is rare to see individuals have, but maybe it could be like a previous business owner. They might do this one. It could be asset liquidation or repayment. So you'll want to check the actual bankruptcy record. And then the time on the credit report is also 10 years. So just all that to say that when you do get a bankruptcy that you see pop up, obviously it's a red flag. Think about what your policy is around bankruptcies. Does it matter to you if, it happened 9 years ago? And since then, they have a new job. You can see that they've opened new lines of credit, that they're paying everything on time, that they have a healthy checking and savings balance. Maybe it doesn't matter so much anymore to you. Or do you want to have a policy where, like, just you're never going to accept anyone who's had a bankruptcy? That's okay too. It really is up to you. And just make sure that you're not making exceptions for some people and not others. Whatever your policy is, that's it, right? Just make it easy. Think about it ahead of time and kind of think about how this would affect you. If there's an asset liquidation in that case, yeah, I mean, it says a lot about them, but at least they don't owe any more money, right? So that's something to definitely keep in mind. Okay, so stopping at this section here, I'm gonna go to the Q&A. So again, Q&A box for questions. Don't put them in the chat. I may miss them there. Okay, and I have Richard asking, if I'm contacted by a landlord and give a favorable report on a former tenant, can I be held liable if things later go bad? Richard, not that I'm aware of. I honestly think that there's more concern than there needs to be about the information that you're sharing, especially if it is favorable. You're not guaranteeing anything in writing to them that they're going to be a good tenant. You're not being hired by them. So I don't think it's an issue, but if you do want to double check with your attorney, you certainly can. Michael has a long story of a tenant with multiple evictions that did not show up on a report. Then they found it in public records and they weren't sure that they were the same person. Okay. Yeah, again, something that does happen and it's so unfortunate. But what I would say is at least with AAOA, if you're getting that social and that name correct and we can pull those addresses, that is the beauty of it. I mean, if we know everywhere where that person has lived, even if the date of birth, even if the social is wrong, we can find it. But we need to know where they've lived, right? That's the tricky part with evictions. It's only as good as the addresses of which you can confirm where the person has lived. Okay. John says, what about requesting bank account numbers on an application? I saw a big discussion about that. I've never taken it too seriously. I can imagine a bank would even verify, let alone let you see transactions. So we're actually working potentially on a product that would allow you to do that. But the bank account number, it's difficult to verify it with the bank. It depends on the bank. Most banks, they're not going to tell you that information or verify it for you. I think really you're kind of, I hate to say it, but you're kind of taking the tenant's word for it when they're giving you their bank statement. That's actually their bank statement. But we're working on a product that could potentially do it where the tenant would be on our system and they would log into their bank account from our system. And that would make sure that it's actually coming from the bank itself. But they have to give permission to do that online, sort of like how they give permission now to release their credit report, but it would be from their bank. So if you want that feature, take our exit survey. I think I have it in there. I'd love to hear your thoughts on it. I would love to get this product launched sooner, but we have some other priorities. But if you tell us that's something you guys definitely want, we will accelerate it. Patrick says, anyone know about whether a landlord can refuse a Section 8 applicant in California? I believe this is so. Anyone know what the penalty is? Ari says it's illegal to discriminate based on source of income, which includes vouchers like Section 8. Ari is correct. So Section 8 housing in California definitely has some different rules. So you can't deny someone just because they're Section 8. However, the amount of income from Section 8 plus their job, if they have one, still needs to be your minimum that you require for income, right? So as long as that meets your minimum and they pass the full background check and all your other requirements, then yes, you do have to rent to them as you would any other applicant. However, if they don't pass your credit and background check, you don't need to rent to them. So it's not that you have to, but you just need to put them under consideration and make sure you're considering their income from Section 8 housing as if it were income from full-time employment. Okay, high debt. Is it okay? Joel says, is it okay to make a rental criteria or policy that applicants have a certain amount of available income beyond all debt payments? Yeah, absolutely. So he says, like a criteria that the applicant has free and available income of at least 2 times the rent beyond all other debt payments. Yep, absolutely. You can make that. I mean, check with your attorney again, but I don't see a problem with that. Um, Haley says, which report do you get these collection details from? That's the credit report. It'll be in a collection section. Okay, I'm going to stop there real quick and then we'll get back to questions because I definitely want to finish this part up real quick. So once you have someone that you do want to decline, because I know a couple of those questions touched on that, just make sure that you are basing it on actual things that do affect their ability to pay rent. This is from HUD's guidelines, basically warning you that it needs to be related to the tenancy and past incidents that are likely to recur, right? So it's very vague, I know, but just be careful, right? And make sure that you're applying to everything, to everyone consistently. You're serving them an adverse action letter or declination letter. So if you're from Tenant Alert or AAOA, that's automatically included with all your reports. So you can just hand them that letter with their rights and you check off a box for the reason that you're declining them. They do have a right to request any sort of disputes or investigations be done if anything's inaccurate. They can get a copy from us within 60 days. So make sure that you're giving them that declination letter. In California, there's some new rules you want to check out. I'll go over that in a bit, but that's a little different in California now. If you are taking adverse action due to a criminal record, always contact the screening provider first, make sure you have the right person, and of course your attorney. It's a lot more tricky to decline someone because they have a criminal record, so you definitely want to get the green flag from your attorney before you do that. Also, check additional adverse action laws. So this is California's AB 2493. If you're in California, look that up. We also did a California legal webinar a couple months ago that went over this new law. So definitely look into that ASAP because that is into effect now and it does affect most of you on the call. Okay, going over some quick risk mitigation tips. So renter's insurance, okay? Look, you can run all the credit reports you want, but there are still things you should do to protect yourself because you never know, even if you do everything right. A lot of things can happen by accident as well. So think about, you have a renter, they bring over a guest, there's a slip and fall on the guest. Now the guest wants to sue you. However, if the tenant has renter's insurance that includes liability of that type, then they can go through renter's insurance instead. It's not just for the tenant's benefit, okay? It keeps you out of the loop, keeps you from being the first party that the tenant is going to go to seek any sort of financial compensation. And basically dog bites, that's another one. More pets, more emotional support animals than ever before. That's a big one. Guest slip and fall, I mentioned, theft, natural disasters out of your control. Here's an addendum. I'm going to, again, send you the slides and the links to this addendum as well, so you can provide it to your renters, basically stating that they must have renter's insurance. Make sure you're listed on the policy so you're notified if they cancel at any time. Here's a link with Liberty Mutual. We recently partnered with them. If you want to suggest that they get Liberty Mutual, you can't force them to get Liberty Mutual, but it would make it really easy if you just send them that link here. So again, I'll share the slides with you. Another one is rent and debt reporting. So I mentioned this briefly earlier that rent reporting is a lot more accessible than it used to be, and it is required in California. So now you can report those positive and negative to all 3 credit bureaus. And when the tenant knows that their rent and their debt is going to be reported, they're so much more likely to pay. 96% of tenants that are reported on Front Lobby pay rent on time. We did partner with Front Lobby to do rent reporting. Again, it's required in California for landlords with 15 or more units. There's some other exemptions as well, so check that law out. And as far as our partnership with Front Lobby, the tenant can pay $4.95, or the landlord can pay an annual subscription, and that includes up to 20 tenants being reported every month. You can add additional tenants for $1 per month from there. So whichever, format works for you. And then here's the link to sign up, and you can basically get started on that rent reporting. I think it's a fantastic tool to really, even though it's not required by law in all 50 states, it's just California for now. But I do think that overall it does benefit landlords as well. So make sure that you're letting your future tenants know that, hey, if you report rent, your credit score is going to go up. If you don't pay rent, then, I'm going to report it as a collection on your report. Okay, lease guarantee is another one. I touched on this as well. So lease guarantee reimburses for court judgments from $1,000 to $10,000. And again, one of the issues we see is, okay, you take the tenant to court and then you're just hoping that they leave, that they get evicted, right? You just want that order, but you never see the money from it. So what we're trying to do here is with the lease guarantee partnership is make sure if you do get that court judgment, it gets paid to you within 30 days. So real quick, just visit AAOA.com/lease guarantee to learn more about that. Since we are short on time, I think I am going to kind of get here to the end. A couple of other reducing risk tips. So co-signers, if you want to include that as part of your, screening practice. So if they don't meet your criteria, then maybe you ask for a co-signer. That's a definite possibility to maybe feel more comfortable. But at the end of the day, co-signer is a co-signer. They're not necessarily going to have to pay you, right? You would still need to take them to court if they didn't, but at least it gives it, more of an incentive if they have good credit that they don't want to ruin their credit, right? So co-signer is not a bad idea to think about if the tenant doesn't meet your requirements. Okay, so we're going to stop here at Q&A. I'm going to stop sharing my screen real quick so I can take some questions from you all. I know you have plenty here. So again, put it in the Q&A box so that I don't miss it. Okay. Ari says, I've been told that landlords in California almost never collect through collections from things like evictions and damages. So they don't bother paying lawyers to pursue those financial judgments. Landlords just do the eviction to do the sheriff lockout and get the property back. Yeah, that does happen, and not just in California. It's unfortunate, right? Because there really, in that case, is no consequence to the renter, right? So I definitely think it's worth it. The other thing you can do is with Front Lobby, right? I mentioned you can report rent, but you can also report debt. To report a debt with Front Lobby, it's only $99. So if you did want to put it on their collection account, like that section, Front Lobby can do that for you. So it's $99 each time for each tenant, I guess, per lease. So definitely contact them if you have any debts that are owed that you could place on the credit report. It doesn't require you to use a collection agency or even have a judgment. So you don't need a judgment to actually report it on the credit report. That is a myth. So it's still worth it to report it to the credit bureaus. Also, Haley says, please talk about how to avoid what you can do if you're dealing with identity theft. So avoiding identity theft is really going to be, I know, putting some of those identity theft monitors on, making sure you're getting notified, keeping your passwords and your things as safe as possible. There are a lot of identity theft services out there, and some are even free in some cases with certain credit cards. So I would start there if you're worried about your identity theft, and then just also, having safe practices. So who you're sending information to, make sure that it's password protected always. Personally, like I hate the idea of sending anything that is, has my social or driver's license or anything like that. I have also all of my credit reports frozen. I highly suggest all of you do that too. That just simply means that people can't open up a line of credit under your name without going through an entire verification process first, where you go out of your way to unfreeze your report. If your applicants have their reports frozen, then you probably have seen this before, where they have to go unfreeze it and then call us back so we can repull their credit. It's the same thing. It's a lot safer than just having it out there for anybody to just pull credit on a whim. Okay, let's see here. Okay. Sam Budani, are there various collection agencies? I mean, different levels, small versus large, private versus big companies. How much does it cost? Yeah, there's collection agencies. So there's local state collection agencies. So those might specialize in maybe all kinds of collections, right? But in a specific area. So they're very familiar with the local laws. So they might be doing collections, for retailers, but also multifamily. I personally think it's a good idea to find one that is specifically good at multifamily, because it is different than collecting debt on like a retail credit card. Local is nice because they might be more familiar with the local laws and what they can do. There's a few big national ones, but they usually will work more with like larger property management companies, or they might have minimums on like how many units that you have registered with them. So you really just need to look for one that is willing to work with your size portfolio, that also has experience in multifamily and experience with your local laws. That would be like the perfect collection agency. We are working on a partnership with a national collection agency that would be willing to take accounts of all sizes. So stay tuned for that coming up, maybe I think 2026, we'll see. But it's definitely worth having one in your sort of network that you can reach out to when that happens. But you can also use Front Lobby. Front Lobby is not a collection agency, but they can at least get it started by just putting the debt on the report. And sometimes that's enough. Sometimes when a tenant sees their credit report score drop because all of a sudden the debt is on their as a collection, they're probably going to want to pay you, right? Now, collection agencies have other tools, right, that can go above and beyond that. Typically, they're going to either charge you a flat fee, which is rare. It's usually going to be more of a contingency fee. So if they collect, they're going to take 30% and they're going to keep 30% of what they collect. That's pretty average. Might be more or less on the percentage side, but again, maybe just start by putting it on the credit report and see what happens. I mean, that might be enough. Okay, Alex says there is an existing app to verify bank statements, which is called PayScore. That is correct. PayScore does do it. There's a couple of other companies that compete with PayScore, and we're trying to kind of create something like that within our own screening reports so that you don't have to go to another company to do it separately. But you could use that one in the meantime and just let your tenants know that they're going to have to share their bank details with PayScore to release that information, and they'll verify it. Sam says, can I hire a collection agency on basis of payment? Yes, you can. That's the contingency fee. So you only pay if they collect. But again, they do take quite a big chunk of it. So keep an eye out for that. Is requiring the income to be 3 times the monthly rent enough? Lisa, I would say you may want to also consider debt in there, right? So yeah, maybe they make 3 times the rent, but if their debt is substantial, that might not actually be enough. So that is a good idea to sort of start considering as part of your criteria, sort of like how it is for mortgages, right? They do your debt to income ratio, not rent to income or mortgage payment to income. Andrea says, I think we can only report positive rent, not negative. So Andrea, with the California law, I think that's what you're referring to. The law actually only references positive. It says nothing about not reporting negative. You don't have to report negative, obviously, but it also definitely doesn't remove your ability to report rent as a debt. As a collection, that is still complete. There's no argument there. If you have a tenant who owes you money, an old tenant, a current tenant, that can be placed as a collection on the report still. The point of the law was really to balance it, right? Because for so many years, landlords had the ability to report debt as a collection. and tenants were not getting credit for paying rent on time. So it seemed very unfair, so, which I could agree with that to some extent, right? If they are paying their rent, then like, sure, maybe their credit score should be higher. That's not a bad thing, but it doesn't remove your ability to report the debt as a collection on their report. Natalia says, please put the link for Liberty Mutual in the Q&A so I can copy to send to one of my investors today. Natalia, I don't know that I could do that right now with my presentation going over here, but I will email you. I have your email, so I'll send it to you after this presentation if you need it today. Also, Mario says, do you need permission from the tenant in California to report to the credit bureaus? So you don't need permission that I'm aware of, but the law is made so that you have to offer it and then they would opt in if they want it. But as far as like front lobby goes, so the company that we're partnered with, they do require permission from the tenant to report positive payments. So there is an aspect of like they need to be in the know to do it. But if they owe you a debt and you're reporting it to collections, they don't actually need to know. That's just your right if they owe you contractually a debt. Also, should you run a credit check on the guarantor or cosigner? Probably so. Absolutely. That is the whole point, right? If you have a guarantor or cosigner, you're just looking for someone who does have good credit, who can potentially have some consequence if, the renter stops paying rent, and maybe the cosigner will hopefully step in. Having the lease guarantee is also nice because, as it says, it's a guarantee, right? So it kind of works like a cosigner if the tenant doesn't pay. You could do both. You can have a cosigner and a lease guarantee. No problem there. That could be like extra protection. So if the cosigner doesn't pay, if the renter doesn't pay, the lease guarantee can at least pay. Okay, Haley says, I'm referring to the tenant having stolen someone's identity. Yeah, sometimes that can happen. Again, it's very crucial to run that social security number fraud report, previous address history report, collecting multiple forms of identification, multiple verification of income. If they've stolen someone's identity and you're already asking for this much stuff, they're probably not going to want to apply to your rental, which is a good thing. So make sure you let everyone up front know that you're going to be doing all these checks and they're going to have to comply. And yes, you're going to get fewer applicants, but that's not necessarily a bad thing. So Basuki says, do you have a presentation specific on how to do rent reporting? Yes, I do. And I will be sure to put that in the follow-up email, Basuki. I'll email you as well directly with that. We did a presentation last month on that topic. Sam says how to lock credit reports. So you contact each credit bureau and you ask for a freeze. So Experian, Equifax, TransUnion, give them a call or just Google it online. I want to freeze my credit. Reza says, is there any time limitation for collection of unpaid rent? Yes, there is. So it depends on the court. Some have different statutes of limitation, so you can check that out. Natalia says, thank you sincerely, and you're always appreciated. Thank you. All right. And what can be done about a tenant who owes money for damages? The damages exceeded the security deposit. The letters were sent to the last known address, but the tenant doesn't actually live there, so the letters aren't acknowledged. So again, you can still report that as a collection on their credit report. So go ahead and contact Front Lobby. They can at least start with that. It's hard to find them without using like a private investigator or collection agency. But again, sometimes just having that on the credit report can be enough. At least you can get started with just that. Okay, Bruce, you put in a very specific question here. So I'm going to definitely refer to that offline since we are very here over on time, but thank you all for sticking around. David says, where can you find domestic violence info with tenants? Usually they have to provide you something to show you like a proof of a restraining order. Important to note that if you're in California, there's a whole new set of laws for domestic violence victims that makes it essentially impossible for you to decline them for a rental. So make sure you're still asking for evidence that's allowed by law, but you do need to be very careful when dealing with that situation. So I would take a look at that new law, just Google, domestic violence rental laws in California. That should pop it up, or you can chat with an attorney about it. Okay. Can a guarantor be responsible after the lease ends and goes month to month? The guarantor did not agree. So you do need to have everything that the tenant is signing, the guarantor is also signing. So whatever that lease agreement is, doesn't matter if it's month to month or annual, the guarantor needs to sign that lease. So if it switches to month or the terms change, every time the terms change or any notice you give, just if you're giving it to the tenant, give it to the guarantor. That's the rule of thumb. Okay. Always give it to both. Both of them sign, both of them are on it. And then make sure also you have some terms within your lease agreement that maybe even further explain how the guarantor is liable. Okay, Lisa says, thanks so much for the warnings. You're welcome. Okay, so I'm going to stop there and I know we talked so much. So I know tomorrow I'm going to be sending you all the recording as well as all of the resources that we covered today, including the slides, all the links. Don't worry, the information that goes out to the front lobby, Liberty Mutual Insurance partnerships that we have as well. And then earlier we heard Michael O'Shea speak, so I'll put his information in that email as well. And I really want to sincerely thank all of you for sticking around. You all have had such fantastic questions. I love it. You're thinking intelligently about how to rent tenants, and there's so much information out there. And let's try to really be smart about it, right? It's a business. Let's treat it that way. You're welcome, Susanna, in the chat. P. Norman, you're welcome. So glad that you all made it. And then hopefully we'll catch you again next week. I hope to see you. I'll have an invite coming out to you all soon for that as well. So everyone take care. I hope you have a lovely rest of your week. Bye-bye.